I'm Matt Bishar with NAREIT.com. Today I'm joined by Andrey Pavlov, Professor of Finance with Simon Fraser University. Andrey, thank you so much for joining me.
Thank you for having me.
Now, the title of your presentation at the NAREIT AREAUEA Real Estate Research Conference was REIT Financing Choices, Preparation Matters. Can you give us a general idea of your overall message?
Yeah, preparation does matter, as in we control for riskiness of a REIT, and then we find REITs and managers that prepared for the crisis actually did better. And that's, to us, that's a surprising result, because it shouldn't be like that. It should be your risk and your capital structure at the start of the crisis should matter. That's pretty well established and very intuitive. But the fact that how you got there actually matters is a bit striking to me.
And how did the outcome differ during the financial crisis for companies that you viewed as better prepared versus those that weren't?
It's pretty common knowledge, I think, by now that REITs that had a pretty conservative capital structure, which means lower leverage, longer maturity, and those are the two main variables, but also in other factors, conservative companies did better. And part of that relationship is mechanical. If you have lower leverage, you do better in a bad period. But also, there's evidence that those companies did better than that mechanical relationship would suggest, mostly because they didn't really have to sell to dispose of assets in the middle of the crisis. So that's well established. Our news here is it's not just that matters. It's also how you got there, and that's really pretty amazing. It shouldn't really matter how you arrive at a particular capital structure. So the history before then shouldn't matter, and it does. And in my view, that's entirely because shareholders view that as a signal, as a measure of managerial quality. So REITs that are governed better, prepared for the potential crisis, and then shareholders saw those REITs as good opportunities and rewarded them both during the downturn and then during the recovery.
And looking ahead, does this study raise any other questions for you or other topics that you think may lead to more research?
Yeah, absolutely. I mean, we still don't understand exactly the decisions that led to this change in capital structure before the crisis. So I couldn't tell you what went around the boardroom when those decisions were made, and that's very interesting. So what we say is that the policy prescription or the investment prescription is find REITs that prepared for the crisis before, and that's a signal of good management. But it'd be very interesting to understand actually what happened in those discussions and exactly how they prepared. So the big question is, was it an accident or was it not? We believe it was not. For many of those REITs, it was conscious decision. But exactly how did those discussions happen so that we make sure they happen again next time we're before a crisis?
Well, thank you so much for your insights.
Absolutely. Thank you.
For more on this and other REIT news and analysis, be sure to visit REIT.com.